Hi, everyone. I'm Jackie Davalos. I'm a tech reporter here at Bloomberg, and here to take us through this new era of rapid food and grocery delivery is a great group of panelists. We have Gorilla's founder and CEO, Kagan Sumer. We have Uber's head of grocery and new verticals, Raj Beri. And we also have the founder and CEO of JustKitchen, Chen. So why don't we kick it right off? The pandemic really supercharged delivery and completely redefined customer expectations. How have you guys been going through the last year and a half? It's been almost 2 years since the pandemic hit. I'm sure you've learned a lot and your businesses have evolved. Maybe, Raj, we can start with you. What has been Uber's strategy around delivery, specifically regarding grocery and its new verticals? Can you talk about how that changed during the pandemic and where it stands today?
Yeah, definitely. Thanks, Jackie, and great to be here. Yeah, I would say the transition over the last, close to 2 years in the space has been very, very exciting, and probably more than any time in my close to 6 years that I've seen at Uber. And as most folks know, Uber's traditional foray into delivery has been in the restaurant space, but it's really a business that through the course of the pandemic has really transformed to delivery of anything and being able to do that how consumers want it and how merchants want it. And what I mean by that is grocery, alcohol, convenience. Some folks want that in a scheduled way, and some folks want it in an hour, and some folks want it in 20 minutes. And so over that time, we now deliver groceries to millions and millions of orders through Uber overall. And we do this in a global way. So, we are the largest food delivery business outside of China. And we really look at this, as I mentioned, as a continuum of some users want groceries or convenience items under 20, 30 minutes, and some of them want them scheduled. And so we've really been focused on growing this business. We're excited about our ability and our push into these new verticals.
Now, on that point, you mentioned faster deliveries. Kagan, your company is one of the first in the U.S. Outside of GoPuff to really break into this 15-minute delivery space. Can you talk a little bit about how you developed this model and where it stands today? You launched during the pandemic. What initially spurred this idea to deliver things to people's doors within 10 minutes, and how did you pull it off?
Yeah, to be honest, I cannot give examples to the pandemic because we just began 1 week before the pandemic, so we are quite a new company. But before I tell what we do and how we come up with the idea, I think just a couple of sentences of who we are and why we exist. Gorillas is about 4 things. One, authentic people, taking bold decisions, owning the change, and constantly keep riding. And with these values, we wanted to create a new vision, a world with immediate access to essential needs. So our first point is just the grocery. So we said, okay, how are we going to do this? And we decided to build an infrastructure and a community around the infrastructure. I think 18 months ago, it was in my living room, and it escalated quite nicely. Now, in 9 markets, 200 warehouses. With this infrastructure, we created a business that's above $500 million run rate. I think it's quite a nice development. And on the community side, I think I'm super proud that we have this retention. The 60% customers of our customers are coming back, and really nice partnerships and stakeholders across our markets. And maybe coming to your question, one thing I'm super amazed with this model is so primitive. I mean, what I love about this model is if you're in a cave like 20,000 years ago, what do you do when you get hungry? You just grab that apple, right? And I think what we do just awakens that super primitive hard-coded thing, which I quite enjoy.
That's very, it comes at a perfect time because I think even 2 hours is, way too long for most of us. But on a different front now, ghost kitchens and that model that has really sprouted, maybe you can talk a little bit about why that works. You launched in Taiwan, and I'd love to hear a little bit more about how the pandemic impacted that business. If you saw any tailwinds, or if that model can persist even after the pandemic recedes.
Sure. Yeah, we started not during the pandemic, but just right before as well, about 6 months before. So we kind of sort of caught in stride when the pandemic happened in March last year, or 2020, right? So when that happened, it really sort of put everything into hyper growth. And we operate a network of ghost kitchens in Taiwan and in Hong Kong. But what differentiates us is that we have the infrastructure. That's the ghost kitchen network. But we also have a robust portfolio of brands. We have over 30 brands, half of them being our own proprietary brands, and the other half being partnership brands with enterprises, international enterprise brands, or domestic enterprise brands. So in Taiwan, we were lucky because our COVID situation only lasted between March till about May of last year. We were basically COVID-free on the island here. But during those 2-3 months, it really went from, it really took us into a growth phase that I had never seen before. But after it dissipated and people, everything opened back up and people went back to eating out again, we didn't see any drop off. So I think it really is a matter of habit. It's something that you get used to, and really there's no replacement for convenience. And I think that's the key for us. So I see a huge amount of runway ahead of us. I think this is something that's here to stay. And obviously with the delivery service providers such as Gorillas and Uber Eats, it enhances our ability to get our food to the customers faster. So the faster they deliver it, the better it is for us. And the fact that once we get an order in and we get it ready between 3 to 5 minutes for the delivery driver to be picking it up, it gets in the hands of the consumer in 20, 30, 25 minutes. So it's really about quality and keeping that restaurant-like experience and getting it even closer to it by having this Q-commerce coming to be. So I see incredible, exciting stuff ahead of us.
Well, now that we have, a good overview of each of your businesses, increasingly these categories are intersecting, whether it's grocery or food, or a bit of both. But I'd love to hear more about how you guys are seeing the competition within your particular space. So, Raj, maybe you can talk about how you're thinking about Instacart and DoorDash now starting its own dedicated grocery vertical. What is the strategy to get this to the place where you can compete with an incumbent like Instacart, that has really gobbled up a lot of market share during the pandemic, and also a food delivery giant just like yourself that is vying for a piece of share?
Yeah, definitely, Jackie. And one thing I'll say is that we face fierce competition in all the markets that we operate in. It's actually something that we think is great for the industry overall. It gives more choice for consumers, more choice for merchants overall. And it's actually at a really exciting time to be in this space, we think. And when we look at it, one thing is, we know rapid delivery is kind of newer in the grocery space and newer in this space, but it's actually in Uber's DNA. That's how we started. Rapid ability to get a ride, rapid ability to get your restaurant food. So for us, it's actually a very natural shift into grocery. And I think there's really 3 things that stand us apart and make us really kind of a preferred choice, we think, for partners, but also why we feel really excited about delivering something really strong for consumers. One is, I think we have a global best-in-class tech and logistics platform. Like I mentioned, we know how to do speed, and now we're applying this to new categories like grocery, et cetera. For example, we've launched, with partners around the world. Like you mentioned, we work with Albertsons, we work with Carrefour, we work with different players across the world. An example is in Carrefour in France. They're a strong partner with us, but they were not able to do grocery delivery in any way that was, forget, 15, 20 minutes, but even in an hour or something. And then so through our logistics platform, through our tech, we've been able to partner with them. We've launched Carrefour Sprint, which now gets you groceries in 15 to 20 minutes. And so, we think it's in our DNA and it's in our tech platform. The other thing we think is we bring to the table is, again, this continuum. Merchants don't want to work with partners in one way. So sometimes they have large orders that need to be scheduled, and sometimes they want to be able to offer 15 or 20-minute grocery delivery, and we want to work with them on that continuum. In the same way with consumers, when they think about groceries during their day, or even some of these other items, sometimes they want it now. Sometimes they also are like, you know what, I need this for my weekly shop. And so we're really about that flexibility as well. And that's why we feel really good about our position in this space.
But you don't have, let's say, warehouses in the way that Gorilla has, for example, or some of these other, rapid delivery startups. How do you plan to get to that level of speed? Do you plan to own inventory at any point or employ a similar model? Would you consider any partnerships with, a startup like a Gorilla's, for example?
Yeah, so we work in very different ways across the world. Our focus is taking a partner-led approach. We think it has benefits for very many reasons. One is, we are our DNA is working with merchants and partners. And so again, they have the expertise in warehousing, they have the expertise in also inventory management, et cetera. And so our thing with them is, how can we enable us together to enable 15 or 20-minute delivery? So that's kind of been a primary approach we've taken. In some markets, for example, where Jason is in Taiwan, we are piloting our own warehouses in that model as well. And so, we think this space is rapidly evolving. We've seen the increase in both consumer demand as well as in great entrants like Gorillas and others as well. And so we think there's a lot of different ways, and it's pretty early days in this market.
Khan, maybe that's a good transition to get into some of the competition that's heating up, especially in New York. We just had a pretty big food delivery giant also announce their own 15-minute delivery project. How do you think about the competition and what sets you apart?
Yeah, so I totally agree with Raj on the fact that the competition makes things beautiful and builds the market. Yeah, so it keeps the players alive. And also it builds the market, which is something super important. And I think at the end, there's going to be some local champions, 1 to 3 players, according to city type, is going to remain. And I think being one of these 3 players in the early stages is going to be important. And also there are different types of competition. Yeah, even traditional retail is some sort of competition for us. What we really like, what we really like about what we do, as Gorillas in the micro fulfillment model. Although I agree with Raj that this optionality of different models actually has a nice offering for the consumer. Lately, we begin discovering a couple of things about what we do. And we looked at our sales and we looked at the top 20 and we realized that, okay, 18 of them are super low shelf life, fresh items, fruits and veggies. Yeah? And we said, okay, either we make a mistake or there's something else in this thing. And then we begin thinking about, dynamics of COVID, what actually COVID has brought to the world. And we realize 2 things happening. One, people are more health conscious and people are more world conscious. And then we begin, connecting the pieces. So the biggest waste in the supermarket is happening on the fresh stuff, and people want to eat fresh more and more, and they cannot simply get in their weekly shopping all of the berries for the week. They basically make a huge waste out of it. So what we realize is, with micro fulfillment center, we enable, first of all, easy access to healthy stuff when people want, and we decrease some supply chain steps and decrease the waste also on the retailer part, which we think that this model inherently will disrupt anything that's not needed, and that's why it should be invested more and more. And yeah, and this is what we know, like what we think, that this competition is gonna build like a less waste, more healthy, a more low shelf life consumption in the whole world, basically.
Let's talk about the unit economics of this then, because there has been a few companies that have been burning through a lot of money. You guys just went through another raise, and I'd love to hear a little bit about what is it going to take to get profitable. Raj, on the Uber Eats side, I'd love to hear a little bit more about, the Eats business broke even for the first time, but the delivery segment at Uber is still on the whole not profitable. Could you maybe, we'll start with you on, what is it going to take to get the rest of the non-Eats business to the point where it is making money?
Yeah, definitely. And so just stepping back a bit, Uber's core restaurant delivery business was profitable in Q3. And so we're pretty excited about the sustainability of that model and how it's working. And what we're doing is we're reinvesting those profits back into the growth and success of grocery and new verticals, which are in much earlier days. And so, we have confidence that this business will also follow the path of what we've seen with the core restaurant business. And so, our focus has been on making sure that we are investing in this, and we're investing in it globally. So like I mentioned, we're the largest food delivery player outside of China, and that's our ambitions in grocery as well. We have leading positions in 7 of the top 10 markets that we're in overall. And I think it really comes down to the fact that, as we add more and more verticals and opportunities for merchants and consumers to the platform, it also creates more and more efficiencies over time. And so, yes, for now, we're investing back into grocery and new verticals, but we think that overall, we're going to see similar patterns. And I guess there's 2 things we look at it. One is healthy economics on the grocery and new verticals business, which again, we do believe we are going to see. We are taking also a partner-led approach in most of our markets. So we're not very we're not CapEx heavy or investing a lot into inventory and things like that as well. But what we're also seeing, which is exciting, is that beyond the standalone economics, it's actually creating a stronger overall delivery platform. So the more you add new verticals like grocery or convenience or alcohol, it actually creates more power in the membership option for like Uber One. And it also just creates stickier users, higher retention, more frequency, and higher spend. So we think it's not only standalone going to be a positive business for us in terms of sustainability, it's also going to create a more healthy delivery ecosystem from an economic standpoint as well.
In the interest of time, Khan, where are you on the profitability front?
Yeah. So first of all, we understood that this model is going to be profitable, but it's going to take some time, and we have early indications. So at the end of the day, you get your. That might take? Yeah, I mean, we have our first warehouse generating operating profit. So basically, you need to believe in a couple of things. So first of all, procurement margins 40 to 45%, rider costs 15 to 25% based on the markets, and warehouse costs 10%. So these are all achievable and achieved in some markets. But I think these are wrong topics that we are talking about, because if you look at the profit pools in the grocery retailers, 60 years, they optimize their business and they have 2% margins. Wholesaler, 5%. The real profit in the industry is on the FMCG side of the things. So we always talk about this, how many orders per rider and da-da-da-da-da, but actually the real profit pool is in the CPG side. And key thing is, if you draw the S-curve, Q-commerce is now penetrating into retail, yeah? So as you penetrate with 2,000 products, you consolidate the CPG space. And there is going to be the real profitability of the business in two forms. One, CPG companies will be super willing to be listed there, which is going to translate into ad revenue. And second thing is, we already know what products should be there in this 2,500 products, and we can really create those products with the muscles that we built through our retail partnerships. And I believe we look at we ask wrong questions in the core business, but the real profitability will come through CPG and technology in the long run. It's a $1 trillion opportunity.
Maybe we can move on to Jason now. How do you view the profitability of your business? Have you guys gotten to a point where you're making money, and if not, how long do you foresee that taking on the ghost kitchen front?
Yeah, I mean, we self-operate all our ghost kitchens. So in a way, it's a lot like it's quite simpler. I mean, the economic units are quite different than the delivery service providers. You know, we really we're off Front Street, so our occupancy is really where we're winning. You know, we're occupancy at 2% versus 18 to 25% on a high street rent or in a mall. So where we're taking advances are on the occupancy and also on the labor, because we don't have front of the house, we just have a back of the house. So we're getting extra points on the real estate. We're getting extra points on the labor side. Our food cost it's almost on par. So it's really just a matter of being having the data that's available to us and having the right analysis so that we're bringing the right menus to the right TAs and engineering the right construct of a menu so that we're within a certain confines of a food cost structure, say 35%, 33%. As long as we're hitting those numbers, each unit of our ghost kitchens are profitable. So, you know, a traditional restaurant, brick and mortar restaurant, you're successful at maybe at 10% to the bottom line. You know, we're able to get to 20% because of those reasons I've mentioned. But we're expanding rapidly. So we're building kitchens, you know, across different regions, and just the high growth of Southeast Asia. I think Raj, I know that Uber Eats is quite familiar with the region. This is where we're doubling down. You know, it's the economics are there for us to build.
On the expansion front, Khan, I'd be interested to hear a little bit more about why Gorillas had to slow down their expansion plans. And maybe you can also comment on, you know, we had reported that when talks broke down with DoorDash's investment, a key reason for that was because of a disagreement regarding your plans to expand in the US before improving the unit economics in Europe. Could you maybe respond to that and also give us a little bit of color on how the business has been going after this pullback from certain markets in the United States?
So simply, we didn't stop our expansion. We allocated our resources to the right expansion. So basically, we are already in 9 markets. We are happy about our markets, and I think what we have seen is the potential of our existing infrastructure, even without opening one warehouse, can go to 4x. Yeah, we can now. We are around 550 million annual run rate. We can 4x it without opening one single warehouse. So this is already a nice infrastructure to capitalize on. This is one. But having said that, we're not going to stay there, but we're going to increase our footprint in the existing markets. So expansion just is not happening internationally, but more locally. This is one. Second thing is on the DoorDash deal. I don't know if I can what I can disclose here, but I try to just tell the mentality of Gorillas. So Gorillas is doing this with super from the heart and with the values, and we want to consolidate this market. And for that, you know, you need to accept to die in the ocean rather than swimming in the river. Yeah. So that's why we don't want to leave the ocean and just stay in the river. So that's why US has an optionality value. So that optionality value is super valuable for us. And once we optimize this business in Europe, it's going to be rare cases that Europe is more advanced than US in this model. So we're going to apply this and scale it once the right time comes.
Thank you so much, you guys.